and many other concepts. Hi, I'm Ahura and will be with you to review the most important events of the week ahead in the last days of March. While the first quarter of 2022 is going to end this week, the war in Ukraine, inflation concerns, energy crisis, and fears of economic recovery progress sounds like will be with us to move to the second quarter. And this week will be even more important with inflation numbers in EU and United States and non-farm payroll numbers on the first day of April on Friday. Number 1, US GLTs and CB consumer confidence. While we are waiting for US employment data on Friday, GLTs will be very important to know the labor market situation. If February GLTs also become more than 11 million, same as January, it means that the labor shortage continues. On the consumer confidence front, Tuesday's CBs estimated are expected to show a fall to a 13-month low of 105 in March, compared with 110.5 in February. Overall expected data are not in favor of US stock markets. Number 2, US personal income and spending. Personal income and spending both are expected to ease in February as the monthly child tax credit ended and higher inflation in January and February changed the consumer's habits. We shouldn't forget also that the PCE inflation expected at 0.6% in February means that the real income will be even more under pressure, and with increasing worries about the economic development, people will be much more cautious about their spending of savings. With estimated data, the US dollar will be under pressure. Number 3, China Purchasing Manager Index. Last week in Europe, March PMI data were positive and ignored the concerns over the possible effect of the Russia-Ukraine conflict. But for the coming PMI data from China, it's not just about the war. Due to the Chinese COVID-0 policy, some cities including Shanghai were in lockdowns and some other restrictions still remain in place to combat the spreading of the virus. In addition, there are downside risks from the slump in the real estate sector and regulatory crackdowns. Therefore, the outlook is not much positive for February economic data from China, which means that we have to see more pressure on Chinese stock markets and yuan. Number 4, Eurozone inflation. Europe is the biggest economic victim of the war in Ukraine. European production and life directly depends on the Russian oil and gas, and this conflict increased the global energy cost, which is expected to show European inflation pressure continues to hit even more than other parts of the globe. Eurozone March inflation is expected to increase by 6.5%, which it means more pressure on ECB's next meeting to start some changes in its policies and find a way to stop the inflation. Most probably with the faster lowering the tapering of its bond purchases. European stock markets will not be happy with these numbers. Finally, number 5, US employment data. Federal restrictions around COVID and financial needs put the people under pressure to go out and look after the job, which caused 582,000 newly created jobs in the past 3 months on average. While hiring among the small businesses are expected to fall to a 1-year low in February, overall non-farm payroll also must decrease from 3 months average down to 475,000 in March from 678,000 created jobs in January. However, even that much increase in a labor market will be enough to decrease the unemployment rate down to 3.7% and lift the hourly earnings to 0.4%. Better than expected NFP data must increase the stock markets and vice versa. Thanks for being with us and hope this week will be an amazing week for you.